very much, everybody, for joining the SRP blockchain webinar, and to our panelists, obviously, in advance for the contribution. This is obviously an uncertain time, and probably most people in our industry are working from home for the better. We share the limitations and the frustrations, and we do apologize in advance for any technical issues. And his market expertise to enhance investing experience and client engagement around complex investment solutions, such as structured products and alternative investments. So with any more preamble, we are going to start with Daniel. So Daniel, why don't you tell us a little bit about, how, or what is the scope to incorporate blockchain technology in financial markets, and more specifically in the structured products market? At SRP, we hope, and we are listening to at SRP. Very quickly, I'm going to give a quick overview. There seems to be a...
Hello, can you hear me now? Hello?
Hello, I can hear you now.
Very good. So if everyone can hear me, also warm welcome from my side, from out of Switzerland. When it comes to tokenization and issuance of digital shares, or as we call them, crypto assets, I think there are three very crucial elements. One is you should issue them in a regulatory compliant way, means that you have to adhere to the financial market laws, make all the KYC stuff correct, and of course make AML check and anti-terror financing. Second, in my opinion, very important one is to use
Sure, very happy to. Yeah, all kinds of assets. We also, of course, have a big angle of securitizing digital assets and cryptos. We work here with multiple parties in Switzerland, but also internationally that that basically are in this market, especially in the financial product market, like for example, SIBA Bank or CVVC, the venture fund behind Inacta or together with Inacta, and we help a great deal to make digital assets bankable and help with that to connect, of course, the financial markets to the digital asset space and increase investments in that field with all the abilities that securitization basically offers.
Fantastic. And Daniel, what do you think are the crucial elements of the tokenization, and how can this help to expand the use of blockchain and therefore make blockchain more mainstream and maybe more increase the profile in the financial markets?
Well, I think that the three crucial areas I already mentioned. What we are working on, yes, of course, we provide the technology, but when we look a little bit deeper into technology, for instance, there's still some, let's say, unsolved areas. If you issue cryptocurrencies right now, we can't get clear where in the future these crypto assets, on which protocols they will reside. You know that we have Corda, for instance, we have Liquid, we have, of course, still Ethereum around, or Tezos. They're all candidates for blockchains where in the future that the crypto assets will reside. And we have a lot, of these blockchains. And that leads me to the second point within the technology. Until now, we don't have yet an established standard of representing crypto assets on a blockchain. You know, of course, there are standards around in Ethereum space. There are also some standards and some new standards now in Tezos. But still, if you're going into tokenization space, at a certain point, you have to decide on which blockchain you want to have, or which blockchain you want to use as your technology stack for your crypto assets. So this is still something that is open, and for sure we will see a lot of developments in the next year, and also clarity there. On the other hand,
yes,
yeah. On the other hand, I touched that you have to issue it regulatory compliant, and that brings me to the point, and we concluded there more than a year ago that the existing structures of the financial market will also support the issuance of the crypto assets. So again, because the bankers, they know how to issue compliantly crypto assets or any kind of financial instruments, and they will also be part of this game. And that's the reason why we provide our infrastructure to financial institutions. So we don't believe that issuers do it by themselves, but they will be supported again through the bankers, as we know already. And the last thing I said before is, in our opinion, very crucial, that we still have a liquid market. And what is missing now, yes, and a lot are working on it, is that we have regulated trading facilities, and there's a lot to come in the next few months, I assume. And on the other hand, of course, we have to convince the buyer side. And what we do there, we established an initiative, a market initiative. We call it the Crypto Asset Directory, where we, as we speak right now, talking to different partners, we want to establish a directory where all crypto assets are listed, so the information that the buyers feel comfortable with and can make a fast due diligence and then also make the investment.
Thank you, Daniel. Philippe, obviously you are in a disruptive kind of environment, and with offering new ways to bring products to the market, and obviously it gives you that flexibility and maybe appetite to use technology to kind of bring those solutions to the market. So how do you think this blockchain technology can benefit the market? Can it help to, make cheap to transact the products for everybody and therefore kind of pass that benefit to the end investor? What areas do you think around, the kind of processing or the process of issuing, transacting structured products, for example, would be, key for this kind of blockchain technology?
Well, I think it's clear to say that involvement in technology and in blockchain can certainly assist that and can certainly bring advantages there in terms of how we transact and what the basis for that are. I think that we see quite a few enhancements there already that are in progress, and certainly the end goal is that the access to assets will become a lot easier, and we're talking here of many different kinds of assets. But in terms of implementation, I think Daniel already touched this point, and certainly is also a bit of a better expert there from how I know him. But it's clear to say that transactions, the middlemen can be cut down, and transactions can be created a lot more efficiently in the future. And from that point on, I think that's the things there. But maybe Daniel, you can fill in on those points as well.
Yes, of course.
Daniel, do you think to that?
Philip just started. Of course, basically, if we have everything in a distributed ledger representation of any kind of assets, and basically blockchain is a protocol layer who helps you to transact property rights. And with this, so if you make a trade, in the very moment you make the trade, the settlement is done as well. Mm-hmm. There's no reconciliation which has to be done anymore and things like that. And that's what you just started to say, Philip. Basically, it's changing the role of the intermediaries. Mm-hmm. And banks, of course, are also intermediaries. And trading facilities will look a little bit different than we know nowadays. So that's exciting. And with this also, the costs will go down dramatically over time. Right now, the costs are still high because we're at the very beginning. So a lot of work to do with lawyers still, and also technology, because not everything is yet fully ready. There are a lot of tests out there, a lot of pilot transactions have been done, and trading facilities are built as we speak right now. But I'm pretty sure that down the road, in a year, there will be a totally different environment, and we will see more trades on the blockchain or enabled by crypto assets or distributed ledger technologies.
Okay,
I would
go ahead.
No, I would absolutely agree with what Daniel just said. I mean, that's exactly, I think, the main points of the innovation to find more efficiency there and certainly more access over time.
And if I may add another point,
Sure.
The current capital market, you have, a lot of small and medium-sized businesses do not have access to it because they only need capital like for $1 million, 2 or 3 or 5. It's not worth to access the current capital market. It's quite difficult. It's very expensive money if you take it from the traditional market. So with tokenization, so to fractionalize the capital more in smaller pieces is possible at lower cost, way lower cost. And this will enable the access of small and medium-sized businesses to a new kind of capital market, which will now start to be built. And this is a huge opportunity, for instance, the government also sees here in Switzerland, and they're actively supporting by defining new laws, by encouraging. And actually, I am in the Swiss Blockchain Federation, which is a public-private initiative, heading the working group STO, so security token offerings. And it is our aim prepare the ground that this starts to work, this new capital market. And here, for instance, established a guideline with best practices for issuers for Switzerland in order to issue digital shares on the blockchain. And it's very sad to say, but I think Corona now also, this crisis creates kind of a momentum because there will be a lot of capital needs and overcome the liquidity shortages of the businesses now who are affected by the lockdowns. And there are already now in Switzerland some institutions started now to put the message in the market that there are other ways also to finance your business now, and that what they mean basically is to go into this new capital market with smaller pieces and approach another buyer side. And this is possible with the new possibilities.
Danny, maybe on that note, can you maybe give us some insight on some examples on that? I mean, not from the latest developments, of course, from things you've been working on during the legislation now with the parties in Crypto Valley.
Yes. So thanks a lot, Philip. Yeah. So for the latest development, we don't have yet examples, of course. It's just now kicking in. But we have done a few STOs, and we also do cross-border STOs. And I think it's quite interesting to give you one example. So just that you know where we come from. So Crypto Valley for us is Switzerland and Liechtenstein, and we have more than 800 companies working in this space. And there's our sister company, CVVC, so Crypto Valley Venture Capital, where we also invest directly in startups. And so we do quite new stuff there. And we have one very interesting STO is called Finca. It's a Bolivian cattle farm, and they want to extend the farm and buy more land. So what they have done now is with us an STO, it's still running, so it's still in the primary market, in order to raise capital to grow the business. And it's a very sustainable and solid business with a very solid performance. Usually you can expect like a 5% performance on this kind of financial instrument. And that just shows you that it's already working, and it's not only working for very simple small and medium-sized business, but also something like a cattle farm, who a lot of people, for instance, have not thought of earlier. But it's a very nice example, in my opinion.
It's very interesting, Daniel, actually, because it shows that there is an application for this kind of technology, not only to kind of democratize, the access to products, but also to maybe change the way the market works. Obviously, the structured products market is an investment bank type of driven business, very sales driven, where maybe the traditional ways are kind of reluctant to embrace technology. You always need the middleman. You always need that human face to kind of close a deal or close a transaction. You want, or that's the way it's set up. So what are the challenges to really disrupt that setup, and how long do you think it will take, based on recent developments?
Shall I first, or you, Philip?
Yes, very, very, very quickly as well, because I need to now get a Harrington in. We kind of was so wrap it up. What are the challenges really for this kind of technology to get into the financial markets and the structured products markets?
Well, I think for me it's the very crucial thing is now to create a liquid market. And we have to focus on this. And this is what we do in the Swiss Blockchain Federation also. We convince now the authorities and financial institutions to look into that. It's a chance for a lot of financial institutions to go into this from all segments, from the retail banks up to the institutional. I think they have to look into it, and they also do it as we speak. So I know from a lot of big banks that they have internally already tokenizations projects running, but they don't make it public yet. But down the road, in a half a year, we will see there way more, and I hope that the market is developing then as well.
Philippe?
Yeah, maybe I can add. I just sent on the chat the example of Thinka that we also been in touch with, are also part of in creating a security on their token. Maybe if I can add in there, you of course what Daniel just described. You also see that with the new crypto banks in Switzerland, with SEBA and Signum. There are clear implementations of blockchain there, and how the markets and how the financial products will look like, and what they create out of these markets. So I think there is a lot more to come, which is just starting with some of these examples right now.
Fantastic. Well, thank you very much, both of you, and please stay tuned. We're gonna get well, last but not least, Harriton Corisis for Resonance. Harriton, are you there?
Yep, I'm here.
Fantastic. Well, thank you for staying, and you are going to show us some slides, I believe.
Yes, definitely. Can you see my slides? The first one.
No, I can't see them. Let me see quickly. Panelists. Okay. Okay. No, I can't see anything from you, Harriton.
So I am sharing it. I think you need to drop down on the top below the speakers.
Yeah, hold on. Yeah, give control, but you don't appear there. Why is not your name there? Give control automatically. Okay, see if that works. No, you still can't show anything?
I see my slides on Zoom. I think you need to switch some drop down to see what is actually presented.
Yeah, I can. Unfortunately, I'm not able to give you that.
You have.
So in the give control facility.
When you switch at below, yeah. When you switch from the webinar banner to the SRP structured product, you should see. Everybody should see the slides. I can see it.
Right.
You can see the Harriton's slide.
Yes.
Yeah. So below the picture, below the stream of Philippe, there's one drop down that it says webinar banners. And if you click, you can select SRP structured products.
But I cannot see that. Hold on a second. Under Philippe's in the banner, Philippe, okay.
There's a white button below.
That's the one. Yeah, that's the one.
Yes.
Brilliant. Thank you, and apologies for the
Great. So hi everyone. As Pablo mentioned, I'm Harriton. I'm a co-founder of Resonance X, and our mission is basically supercharge wealth managers and financial advisors in dealing with more sophisticated structured products and engaging their clients. I'll switch my video off, which will make it probably sound better. Over the next 5 minutes, I'll talk about a topic which is close in our firm's DNA, the use of blockchain to simplify the very complex space of structured products. I will start with a very quick bird's eye view about why this is relevant, tying to what Philippe and Daniel talked about recently. And then I'll dig down a bit more in the world's first issuance of a structured products on a blockchain and how that was done, which is something we did in March 2018 within the FCA regulatory sandbox. So very briefly, there's a lot of noise around the blockchain and structured products. So why is this relevant? Very simple. A blockchain is a database, but it brings a novel architecture to securely store, exchange, and share data. So there's nothing much about it, but proponents of this technology talk about a tremendous impact if widely applied, and estimating its magnitudes at a few percentage points of global GDP within a decade. Now, the promise of financial services is that through automation and by enforcing convergence on common data standards within and outside an organization, and also eliminating the need for a central authority to hold the golden record. This leads to reduces operational, counterparty, and settlement risks, and also enable instant value transfer, and also decreasing capital requirements as a result. I put some logos here in terms of promising development that we've seen so far. The one has been HSBC's recent announcement of being able to settle hundreds. I think this is rolling on its own, so I have to.
Sorry, that was me. That was me. Maybe Harrison. Sorry.
All right, no worries. Great. So, so among the recent developments we've seen so far is HSBC's recent announcement of being able to settle 150,000 of FX transactions, which are worth $250 billion using a blockchain, DTC in the US, demonstrating that the blockchain can support the trading volumes of US equity markets. So roughly around 100 million trades a day. And the stock exchange shares in April last year, followed by Deutsche Börse just last November, doing the same tokenized issuance with the shares of Swiss SME. But now I'll start focusing on structured products, where it's a 400 billion annual turnover market, and its outstanding assets under management is roughly rivaling the $2 trillion hedge fund industry. So the topic of complexity is what I'm going to focus next to give you an idea why automation can add a lot of benefits in structured products. Mainly because of the lots of legacy and manual processes and the IT systems involved. So I'm going to walk you through a typical private placement, which forms a large part of the market and still involves a large number of steps, up to 10 documents that need to be drafted and agreed, some signed, up to 10 different fragmented IT systems, different spreadsheets like distribution lists, fee blotters, among others. And even in some jurisdictions, there are still required some courier trips to obtain some manual signatures. And the trouble doesn't really end after the product has traded, of course. A still large pain point of the industry is the management of the life cycle of events during a structured product's life, like conditional coupons, early maturities, callable events. And this is still a struggle to transparently monitor portfolios containing products from different manufacturers. All of them could use different representations for the same economic events, etc. And this opaqueness really makes even some of the most fundamental operations, like clearing a settlement of these products, upload donations. So this is exactly the point that we made as Resonance X in March of 2018, when within the UK's FCA regulatory sandbox, we issued the world's first structured product to be cleared, settled, and custodied on an open public Ethereum blockchain. What we did is we facilitated the issuance of two sterling-denominated structured products, identical economics, that each paid 13% per annum coupon, as long as the FTSE 100 expired at a level above 2% from its initial price. And the important thing is that we demonstrated that with real money and clients, compared to the standard infrastructure, the relevant costs via blockchain were really 93% lower, while satisfying all legal and regulatory requirements, as Daniel and Philippe have also mentioned earlier. So the positive takeaways is that we placed our flag in history, and also we got to a very good working relationship with the regulator, and of course, very good visibility with the press that a fintech desperately needs. And let me show you exactly what happened. So this is the traditional model, where the money and assets flow through the sub-custodians and the custodians of the clients and the issuers, the central securities depository, the global custodian, and the international central securities depository, which is at the heart of the financial system. So again, different companies, representation of trades, different conventions that need to be reconciled before a safe execution, makes this process very complex. So errors and delays can occur even in the simplest of products, and typically trying to find where the error took place is like looking for a needle in a haystack. So how was the world's first structured product actually issued? So within the FCA's regulatory sandbox, we worked with Nivora, which is another very innovative fintech firm for the tokenization and digital custody. We worked with Marek Solutions and Startup Opus for the hedging and issuance of structured products. And the diagram, as you see, immediately becomes much simpler. And everything also happened within minutes. So our investors on the right, they invested in tokenized fiat on Resonance X, initially depositing sterling into the client money account of our custodian, generating the digital representations of that cash. On the left, the issuer issued the assets recorded on the blockchain, and the legal and beneficial ownership was allocated on the blockchain before the exchange took place in a legal delivery versus payment manner, satisfying all requirements during clearing and settlement. So we benefited from the fact here that the FCA had already recognized that under the right conditions, blockchain can be seen as an independent third party, meaning that there's no need for a registrar, and the custodian becomes the guardian of private keys, safeguarding the client's digital assets. So this significantly simplifies security issuance, as all relevant documents are digitally issued. Transaction can happen in a purely peer-to-peer manner between the issuers and investors within minutes. So only basically guaranteeing the satisfaction of all legal and regulatory requirements. So apart from the initial issuance shown here, of course, there are massive efficiencies for structured products.
Hariton, sorry to interrupt you.
Yep.
In what slide are you? Because I don't think the slides are moving, so I'm going to try to synchronize.
I'm slide 5.
Okay, perfect. I'm there. Sorry about that.
No worries. So now switching to slide 6. So slide 7, actually. So this is actually the sandbox execution that took place. I apologize. I didn't click the button.
7, yeah.
Great. So now we're going to 7. So now this slide just highlights the massive efficiencies in structured products wider than just the execution. So due to the automated administration of the lifecycle events, which in the future can even be through decentralized market data sources and with contracts automating the full lifecycle management. And also because of the continuous digital compliance through the use of smart contracts, ensuring target market and efficient reporting. So fully digitizing this complex process will, in my opinion, almost certainly bring huge opportunities due to the transparency and lower costs, but also leads to bigger risk-adjusted return improvements when including structured products within a portfolio, but also, as previously mentioned, providing access to a much wider investor base due to lower minimum notionals. So we are really witnessing the application of a new foundational technology whose benefits, if applied to the right problems, can be immediate and massive. So now you may ask, what has Resonance X been doing since this first issuance? So after that success, we spoke with a number of potential clients and soon realized that while the key infrastructure is being built fast, more time is needed until all the necessary interoperability, scalability, privacy, confidentiality challenges are dealt with for external counterparties to communicate. So during this time, we have been focusing on solving the biggest pain points of professional investors like private banks and financial advisors, and which is really the life cycle management of structured products in the post-trade aspect for structured products and alternative investments. So enabling them to deliver high-quality individual clients. So through our B2B marketplace, we provide state-of-the-art lifecycle management, proactive alerts notifications, intuitive visualization, and tailored investment ideas powered by machine learning. So I'll wrap everything up but I'll be very interested to hear any questions on what we did in the blockchain execution in the Q&A. Thank you very much.
Thank you very much, Hariton. Well, there is a one of the questions we have is from Lucas Erez, and it's how much does it cost roughly to issue a structured product via Resonance X?
Great. Thank you for the question, Lucas. So currently, as I mentioned, we are not a blockchain company. So we are focusing on what we have seen as the biggest pain point, which is not at the moment for structured products in particular, the efficient clearing and settlement, at least in the client segments that we talk to. But it's actually how you monitor a rich portfolio of complex instruments like structured products. So we are not really, maybe Daniel or Philip can answer this question.
Daniel, Philip, do you know how much would kind of make the cheaper the transaction of a no regular structured product if you did it traditionally as opposed to in a blockchain setup?
Well, that's that's also for me a difficult point to say. I guess we all know that the current environment certainly is not at a better price that it might is in a traditional way, and that's also why we started on the traditional issuance process to go with in the beginning, and focused on securitization of basically digital assets. But it's clear to say that in the moment of truth and development, that some of these efficiencies that just been described certainly come to a better outcome that we've seen before.
Would you put a percentage, say, I don't know, transacting a product in the blockchain as opposed to the traditional way would maybe decrease the whole process by the cost of the whole process by 50%? Would that be too ambitious to say? What would you take?
I think that Hariton just named some numbers, and maybe Daniel can fill in a little bit more on what they expect and how the productivity can go up on that side.
So we discussed it quite a lot, and I have opinions from other people in this market from all countries throughout Europe. And the common view on the secondary market is that we believe the transaction will not only be 50%, but factors lower. Mm-hmm. Some estimate the factor of 100 times, because, as I said, the trade is just done and everything is settled. And also, if you have any corporate action, if everything is digitalized and you have an immediate connection to your shareholders or whatever, you don't have to collect post addresses and so on corporate events, because you just have everything, you more or less push the button and everything is distributed. In the primary market, so currently, I think it looks a bit different. At the very beginning, I think first movers will pay a premium because everything is quite new, and not yet everything is quite clear, as I mentioned throughout my talks. So there is still a certain premium to pay, but even there, I'm pretty sure that we will be 1 or 2 times or even 10 times lower than we are currently in the traditional market.
Fantastic. Well, thank you very much. I'm a bit aware of the time now. We just passed the normal time by 10 minutes. So, there are many points for discussion here and takeaways, I think. Hariton, I don't know if because for some reason your presentation, I was controlling it, so the slides weren't going as you were going along. So maybe we can share the presentation with anybody that wants to.
Sure.
Fantastic. All right. Well, listen, yeah, as I said, blockchain technology is helping around many things in the structured products market. We see, the fragmented, the legacy IT systems. You can bring flexibility to cope with the variety of products and payoffs and new demand from investors. We know for a fact that this kind of technology can revolutionize the current operational functions and provide ways to address, regulatory issues, as you have mentioned, around transparency, sales practices, and so on, reporting. So I think there is a very good fit for this industry. In any case, we don't seem to be quite there yet, but I guess it's only a matter of time. And well, kind of thinking of the current situation, it seems like sometimes technology comes as an answer to many things. Perhaps this is one of those turning points for the industry and maybe for society in general. So we will keep an eye on any developments we see in the structured products market and blockchain technology, and we will be happy to answer any questions coming from the audience. Just get in touch with us. I thank you all very much for your participation and for your time, and be safe. Thank you.
Thank you very much.
Bye. Same to you. Bye.
Thank you. Bye.
Thank you very much. Thank you.
Pablo?